Owning a home is affordable for many thanks to low mortgage rates. The problem is that buying a home is far less affordable. A housing market with high prices relative to incomes inevitably requires large deposits. The market is therefore split between those who can raise a deposit and those who can't. For those who can, the stability and security of home ownership is the reward. For those who can't, the private rented sector is generally the only option. The growth in private renting has been an attractive proposition for investors. Buy-to-let lending created an easy route to wealth generation for many. It does, however, mean that small-scale investors own the majority of homes in the sector. The small-scale nature of the market leads to massive management inefficiencies. To date, the returns have generally counterbalanced the costs, but there are emerging risks. Mortgage market regulation will limit the capacity for house prices to grow faster than incomes in all but the highest demand markets. It also remains to be seen whether the regulation of buy-to-let mortgages will be brought in line with the wider market. With weaker prospects for capital growth, some investors will look to higher yielding markets, but higher yields bring greater risk. Many of these markets will have high proportions of housing benefit recipients living in the sector. Reductions to the overall benefit cap could leave some of these households struggling to pay their rent. Further investment is urgently required in the private rented sector, but needs to go hand in hand with making the tenure a better place to live. Policymakers need to recognise that private renting is no longer just a stepping off point on the way to home ownership. For many, it's become the only long-term housing option. But getting the right balance of policy to meet the needs of all those living and investing in the private rented sector will be difficult. Best of all would be to build more homes of all tenures, starting in the most unaffordable of markets.